Yesterday, we had an incredibly eventful Fed meeting with Jerome Powell getting up and doing his press conference, which revealed some very interesting stuff about what the market is looking forward to when it comes to the rate cut story. Many of you guys will know, even if you're new to fundamentals, that it's all about what the Fed does with interest rates. It stimulates, money coming into the system or out of the system, and many market participants were adamantly awaiting some confirmation from Jerome Powell yesterday that rate cuts could be coming in September, and we got that and much more. We're going to take a look at all of these different charts that we could talk about. We're going to take a look at indices today. We'll take a look at gold. We'll look at the dollar, lots of other charts. So stick around. We'll talk top setups for today right after this. Welcome back, guys, to the channel. I just want to thank you for tuning in today. And if you are new to the channel, I want to encourage you to subscribe. You can also find me on Twitter if you use it, or x.com nowadays. But I want to just go over this tweet that I made this morning because I tried to break this down on Twitter for my thoughts on everything that happened yesterday with Powell. I summarized some of my main findings. So let's get into this. So I said yesterday this morning on my Twitter, I said, Powell expressing an obvious willingness to cut interest rates in September like the markets had anticipated was a big deal. Now, you might say, well, they expected rate cuts in September. What's the big deal? Here's the thing. It wasn't about September at all, because expressing a strong willingness to cut in September suggests a possible willingness to also cut in November and December. Because if we're thinking about what Powell said yesterday, people were asking about whether or not a rate cut in September was appropriate. And he can't say, as the Federal Reserve's chairman, he can't say we're definitely going to cut rates in September. He just can't use that language because in economics and data in general, there's just not certainties. There's a lot of questionable things that could happen, or something could come up, inflation could flare up. But he said the consensus right now is for a rate cut to be appropriate in September. I'm paraphrasing, but that's something along the lines of what he said. And the market took that as good news, but not just that. It's more about how he willfully said we think we'll probably cut in September. Because if he says that he's very willing to cut in September if things continue to stay on course, that also suggests that November and December are very much up for debate and very possibly could also see cuts as well. This would be very bearish for the dollar, bullish for gold, stocks, and other things that are rate sensitive. So I'll keep going. He also heavily talked down the concerns that a cut in November was a political move with elections so close. The Fed meeting scheduled in November is very, very close to the U.S. presidential elections. And many people have been thinking, or even Trump accusing this of being a potential political move to cut rates right before the election. But Powell and his team have been very, very strictly specific that they're not making decisions based on politics, that they are making their decisions based on the data. And I personally believe that as well. I don't think that the cuts, if they happen in November, are a political move in any way. Sure, people have biases. The members of the Fed have biases on politics themselves. But I think that their decision-making process, we can only hope with them being a bipartisan put into place team, the Fed, from both Republicans and Democrats, the general consensus is they should be independent of a political party and not part of the politics side. They are meant to be an entity that helps to, keep stable prices and maximum employment. And that's what we hear over and over from Jerome Powell. So his antics were slight, but to me, it seemed like November was already being seriously considered based on his clear preparation for that political bias question that he received during the press conference. I knew, and everyone was kind of expecting this question. Jerome Powell, are you going to cut rates right before the election? Doesn't that seem like a political move? He had a very created or pre-planned response to that, basically saying that we'll cut in November if the data looks good. And he didn't say it exactly like that. Again, all of this is paraphrasing, but the point is it does seem very possible that we do see multiple rate cuts for the remainder of this year, but September is pretty much on lock. So the dollar index is still trading right around 104, but the question is, will we now finally see that 104 level break to the downside? With all of this, weaker than expected data, which we got more of this morning, speaking specifically about like the ISM manufacturing PMIs that came in much lighter than anticipated this morning, and the unemployment claims, which rose again up to 249,000 in the weekly reported unemployment claims. So we see the economy is showing signs of slowing, not necessarily crashing or falling apart, but cooling off to the point where rate cuts definitely seem more and more appropriate if we continue to see this trend form. Speaking of that data this morning, the overall reaction has been mixed for stocks because, again, manufacturing PMIs coming in pretty light could suggest a little bit of slowdown in the growth side of the economy. The outlook for growth is very important to stocks, and it's also very important for the dollar index, which just kind of took a double L this morning with unemployment claims and PMIs coming in light. So we saw the dollar give back some gains here in the last few hours due to those figures. We also have the NASDAQ trading lower. I am still long the NAS off of this daily chart level, which did not turn out very well in the beginning, but we've bounced back. We'll see if that can keep its gains up. And the Dow Jones giving back some of my gains as well in this one. So I'm long both of these charts, and the S&P 500 just slightly red at the time of recording this video. Gold is also up, and from a technical basis, looks pretty strong. We found support right around this area, and as we rallied here, it does look like we may see some follow through to the upside. I do like the setup for gold. And looking at the Edge Finder, I just wanted to follow up on that. The bullish setup that I found on the Dow was also part of the Edge Finder's kind of reading overall on the top setups page, which looks into the sentiment, technical, and economic data. It imports all the statistics and then generates bullish and bearish biases based on what those data points are telling us. It kind of automates the process of doing fundamental analysis to a degree because it looks at a lot of different components and automatically ranks files and scores them. And that's the purpose of the top setups algorithm, which is my daily watch list. This is really where I find most of my trades. Speaking of which, I went long Bitcoin today, which was another trade that I just entered. I'm long, the NASDAQ, the Dow, Bitcoin, etc. Also, I wanted to mention that our summer sale is coming to a close on the Edge Finder. This is going to be your last chance of the year to get 55% off on the Edge Finder. And just a heads up, if you're waiting for a better discount, you won't get it. This is the lowest price that we're doing all year long. How do you get 55% off? You click the first link in the description down below and speak with a member of our team who can get you hooked up with that discount code, as well as give you information about the price, details, how the tool functions. If you have any questions about how it works, we're happy to help you out with that. We have a support team on our software companies, on the support side. We'll be happy to help you out with any questions you might have. So don't miss out on the sale. Again, it is ending soon, and all the information is in the description below. And while we're on the topic of indices for a second, I wanted to mention the AAII Investor Sentiment Survey, which showed a slight uptick in bullishness in terms of sentiment. I like to look at this one because when things get a little overly bullish or overly bearish, it can oftentimes be an interesting thing to consider in our analysis. So right now, the latest filing here shows a pretty healthy level of bullishness. We've come off of those highs at 52.7% of respondents saying bullish. And now we've got 25% of people saying they're bearish, about 45% saying they're bullish, and about 30% saying they're neutral on the stock market specifically. This survey is very useful information because, again, when it reaches extremes, it can oftentimes be a potential point to start looking for either reversal trades or at the very least just trailing stops and really, being careful where you're at. When things get too polarized in sentiment, it's oftentimes a good time to kind of recalibrate and think through what you want to do next. And because I mentioned it, here is the Bitcoin trade that I took this morning. So price came down again to this level, and I've been watching this one for a couple days now, but we came back to this level, so I ended up taking a long position. We have Edge Finder confirmation, so I like that idea. We also have yields falling, which is generally speaking pretty good for Bitcoin, especially if growth hangs in there. If you're getting inflation expectations cooling, if you get the kind of perfect environment, Bitcoin could really fly. Same with like high risk stocks. If the environment for growth is pretty good and you have inflation moderating, stocks can do very well. Same thing for Bitcoin, which I believe is mostly just a risk asset. Back to the dollar index for just a moment. What we can see here is that we've really stubbornly held this 104 level when taking a look at the daily chart. And even though we had some cooling economic data, you can still see that dollar does not want to seem to crack. What I would take as a very interesting signal would be we tried to get below this 104 level, but if we could get another strong close under this 104 level, it could signal that perhaps the dollar is finally going to roll over. I think that if it does break this level, it's going to be a pretty aggressive move simply because we've really tried to break this level so many times in the last few months. If it does actually break it, the follow through could be really strong to the downside. In fact, even making a move down to this level seems appropriate, that 102.6 level, if you really start to see dollar bearishness come in. The euro dollar has kind of faltered out after trying to hit that 109 level. Pound USD is pulling back after they actually decided to cut their interest rates this morning, but it was a bit of a dovish cut. They cut their interest rates, but when the bank rate votes came out, they showed some willingness for other members of the committee to actually hold interest rates steady rather than continue to cut them. So they also recalibrated their forecast for CPI lower. And so some people took this as kind of a hawkish rate cut today, which can be confusing on the surface, but when you unpack it, it does kind of make sense. And here's just a reference to what I was saying. So they did cut the interest rate from 5.25 to 5, but here was the difference. In the bank rate votes that I was discussing, they came in at 5 and 4. So this is 5 people expecting a cut to be appropriate next time compared to the 6 people that were expected to vote for a cut being appropriate. So that's more hawkish, right? Because if less people think it's appropriate to cut interest rates, which is what this 5 shows on the team there that makes the decisions, that's a little bit more hawkish. So it was a hawkish cut today. And the yen continues to be strong against other currencies. Here's a look at USD JPY, which has broken through yet another level of key support and does seem like it wants to keep rolling over for right now. Perhaps a little bit of concern about global economic growth is making the yen look a little bit more like its good old-fashioned safe haven status. Remember that the Japanese economy is not particularly fast growing in bull markets. They have an aging population, but it is a relatively stable economy. And a stable economy is sometimes a better alternative if the world's economy seems to be generally slowing and much more volatile in other places. Arguably, that is why we're seeing a little bit of strength for the yen right now against other currencies. And that could be set to continue. We do actually see that the Edgefinder has been giving us a bearish reading on USD JPY, and that's been a really correct call overall. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.